Well, hello and good morning, and thank you for tuning in to the Real Estate Heavyweights University, where we're taking a deep dive into the world of real estate investing for the real estate professionals, for the realtors out there, the people that are wanting to flip, learn how to flip. We're going to be interviewing some people in the industry at some point relatively soon. This is where we'll be, diving deep with them, figuring out how they do their thing. But right now, we're just tapping into the knowledge that I'm gaining as I'm learning on my fourth flip, and as Tavis is sharing on the hundreds of flips that he's done. So Real Estate Heavyweights University is where we do that. On Fridays, we try to come to you with a little bit of a lighter take on the real estate industry, the latest news, try to tap into what's happening with some celebrities here and there, and we get into some terminology maybe. We try to take a look at things that you may not know. If you're a casual looker at the real estate industry, just give you a glance of what's going on, maybe teach you a little bit, and it's a lot of fun. So join us for Fridays. But today we're going to get into flipping and some financing. So before we do that, let's check in. How you doing, Tavis?
Man, I'm doing well. This weather's cooling down. We're looking forward to rain this week. It's a good week.
Yes, it has not rained here in the DFW area in a lot. I think it had one good rain in the last month, and I think we've both qualified as being old when we start talking about the weather. So the next phase that I've learned from doing home health with physical therapy, because for those of you don't know, I have a full-time job as a physical therapist assistant doing home health. I also have a realtor license. I do work with people buying and selling, and then I invest. So I have a lot of insight into the older world. So the next phase after talking about the weather all the time is talking about your doctor's appointments. And when you start having a preference in hospitals and you have sort of a hierarchy of doctors that you trust, that's the next phase of getting old. So we have that to look forward to. So
awesome.
Yeah. So, from my day and week has been pretty busy. Last week was a little bit of a lull with the flip on Mapleton, but we have cabinets in. The painters are there today. We have the countertop guys came by over the weekend to measure. The roofer's going by tomorrow. We've got all sorts of stuff happening this week. So it kind of ebbs and flows, but we're making a ton of progress this week, and I definitely appreciate you, Tavis, for coordinating a lot of that. And I'm getting to see kind of behind the scenes on how to communicate with contractors. And actually it makes me feel a little bit good because my last job that I was managing, I didn't hear back. I just thought, well, I'm a newbie. They don't care. Well, they ignore you too sometimes. So it doesn't help, but it does make me feel a little bit better to know that, hey, they're not just ignoring me because I don't know what I'm doing. So
yeah, no, they're just, I say this all the time to other people in the industry, or if you're just jumping in, if you come from the real estate side and the sales side, the construction side is just built different, right? And they typically are doing the labor, or they're really busy with their projects, and they just get inundated with what they have going on, and that's all they can see. And when they get busy or covered up, they can't communicate. They're just not the best. Even though they have their phone with them, they're just not the best to take 2 minutes of time and update us. Even if they're telling us what we don't want to hear,
right.
They don't understand that concept of communication. The majority of my guys don't. There's a couple sales reps that, work for the companies, and they do because they're sales guys, right? But the majority of the trades that do really, really good work are just not the best communicators. They're just not salespeople. They just don't understand, and they really don't have much of an interest in changing how they communicate.
Yeah.
So we have to become the pest and communicate over and over again, or text the same thing 3 or 4 times. And I found several of the times, so for instance, like my drywall guy that we've been trying to get to go to Mapleton, he's not much of a texter. I've texted him. I knew I wouldn't get a response on Sunday, but I expected a response this morning, and so I hit him again. Well, then he calls me, right?
Yeah.
But I had him on the group text so you could see communication, but he calls me offline anyway. So anyways, that's just a little insight there on how these guys operate sometimes. You just have to be diligent and be persistent to get a hold of them and get answers, because they're not going to be persistent backwards unless they're trying to get a check.
Yep. When they want that money, they figure out how to text and they figure out how to call pretty quickly. So, yeah, I mean, it's understandable. And honestly, like the more organized and the more communicative they are, if they have an assistant or an office, it's just more expensive because they built in some of those costs. So you have to find that happy median of, if someone's just never busy, they're probably not very good. If they can come over immediately, I've learned, that is sort of a red flag. I was like, yep, nothing going on today. I'll be there. That's, maybe you just kind of hit them in a lull, which it happens, but sometimes it's like the busy guys is who you want. So you definitely want to find that balance. So yeah, it's been a good week. I'm really looking forward to what's gonna look like at the end of this week, because we might have some paint done, and a lot of the cosmetic stuff is going to start coming together. So I'm definitely excited.
Absolutely. Yeah.
All that time with the paint samples and all that's going to pay off. So, well, today we are going to continue our Real Estate Heavyweights University, our look at how to flip a house. Like I said, I'm on number 4. Tavis has done over 200. He has a ton of knowledge. We work in the Dallas area. I've been able to tap into a lot of his workers. It was through some trial and error. I actually used a general contractor for a few projects. I fired him mid project of this one and started taking it over myself. And I became very busy because I do work full time and I'm trying to get my flips 45 minutes away. And so it's a lot, and so you learn a lot, and we're diving into how to do that. And one of the main issues with how to flip last time, if you haven't checked out last time, we talked about how to figure out how much of a work you're going to need to do on a house, how to categorize it as a level 1, a level 2, a level 3, or a level 4 flip when you're analyzing a possible deal. And so we're looking at all that. We're trying to build this picture of, okay, is this something that I can even spend my time on to try to flip? Well, the next thing you got to figure out, or at some point you've got to figure out, is your money. And Tavis and I have both gone through this different ways, actually. And he's going to dive into how he did it, and it works for him great. And I'm gonna dive into how I did mine. But before we do that, Tavis, I know you use the bank. I use hard money and private money. Outside of that, what would you say that the main categories are as far as financing goes?
So the main categories would be obviously cash, right?
True, yeah.
If you just have cash lying around. And then other people's money is what we would consider either private equity, private money. That might be, friends, family, a fund, a cousin, an aunt and uncle, something like that, a neighbor. Mm-hmm. And then you have hard money, which is typically what we see is institutions, small institutions will set up hard money where they've raised capital from other investors, and then will, underwrite you and fund the deal based on the property. Is usually the key factors, right? They care more about the property than they do about the borrower. It's not necessarily always true, but the property is a big piece of that. I've heard, private equity, for instance, is obviously similar to bank financing in a way. Typically, they might have longer terms, things like that. But they're going to underwrite you as the borrower and the property as well. They're going to get a little bit more sophisticated than what you see in hard money, or just, raising money from your friends and family. Yep. And then bank financing is typically, depending on what the bank, what kind of products they have available. I use local or regional banks, and what we call kind of like a guidance line. And so that guidance line is saying, hey, we're going to give you an allowance up to $2 million, $3 million to work with at any time, specific to a property that meets these types of criteria. So, for instance, I have loans that if the loan amount is less than $250,000, then our restrictions, guidelines, and appraisal scenarios are much easier to work with. They can do a drive-by appraisal. They don't have to go in the home, etc. Okay. If it's over $250,000 loan amount, then it's going to be a little bit more of a deeper dive. They're going to go into the home and do a full appraisal. that's for the bank, right? To make sure that all the numbers line up to what we're borrowing. And then the cool thing that we're able to do is we borrow money against the project. So total project money or total amount borrowed is including the acquisition price and the renovation included in that. But that typically can't exceed 80% of LTV, loan to value, or of ARV, if you will. So it's called loan to cost is what the structure is for the down payment requirement. Loan to cost meaning acquisition plus rehab, and then that loan to cost might be somewhere between 85 to 90%. It just depends on the deal, the price point, and the structure.
Okay.
But that's typically how my financing works with the bank. Now, to dive a little deeper into that, in order to get that kind of financing, the bank's going to want to look at your resume, if you will, right?
Sure.
So I have a tracking sheet of all of the projects I've been doing ever since we started really tracking them back to like 2011, and I have every deal that we've purchased, our acquisition numbers, our sell numbers, our rehab numbers, our days on market, our project timelines, et cetera. If we made money, if we lost money, et cetera. And then what our ROI was, a percentage of our ROI to track. And then I started doing it with wholesales as well. So I track every deal that I do, and that basically builds a resume to show any institution that's looking at me, hey, this guy's a professional. He knows what he's doing. Here's his track record. Here's his numbers. He's going to be a good risk for us to make money by lending him money on these deals,
Sure.
right? So they're going to look at my credit report. Basically, they're going to pull credit, but they're also going to look at a personal financial statement. So anybody that's building wealth or starting to grow their own personal wealth building should be doing an annualized, financial statement as well. And this gets into what your net worth looks like, what your total assets minus your liabilities, equates to. So this is something I have to update annually. I get with the CPA, we update it, we give it to the bank, and they do basically an annual review each year on me as a borrower, or my companies, and my borrowing status with the bank.
Okay. Yeah, and maybe here in a minute we can talk about what it looks like from start to finish through a project, and kind of what you have to bring to a deal and what you're talking to them about. But I'll get into how I've done mine is different, and interestingly, it's not intentionally, but a lot of the books you read is like No Money Down, getting into real estate with other people's money, and a lot of people glamorize it in a way, and it can be difficult. But the reality is it can happen, and I just happened to do that. And a lot of the reason was I was presented an opportunity, and it goes back to, it wasn't just luck, really. I had, when I was a junior in college, I read Rich Dad Poor Dad, and it took me 20 years basically of listening to podcasts and reading books and dreaming about doing real estate and knowing people that did real estate and being on the periphery in a lot of ways before I finally pulled the trigger. And so I had a lot of knowledge, but the biggest thing is I had decided that this is something that I wanted to pursue. And so then when an opportunity actually presented itself for me to be able to buy a house that was going to be a good investment, I committed to buying it before I knew how I was going to pay for it. And probably dumb, but really the only thing I had to lose was the opportunity. I mean, at the end of the day, it would have been a little embarrassing to have to go back to the seller and say, I couldn't figure it out. I'm really sorry. But
and I've told you this before. I mean, you taking that action is that is the majority of the battle for anybody that reads a book, gets motivated, but then does nothing with it, right?
Yeah.
The fact that you seek the opportunity and then you said, all right, I'm ready to pursue it. I don't know how I'm putting it together yet, but I'm going to go for it.
Yeah, and luckily I had a little bit of a runway. I knew that they were going to be selling. It was a probate deal, and so I had some time to figure it out. So I committed to her and said, yeah, I want to buy it. And if I can't buy it, I'll find you a buyer. That was kind of our deal. And I had my real estate license, and it wouldn't have sold. It wouldn't have appraised probably for a traditional buyer. And so I said, if I can't buy it, I'll find an investor that can buy it for you. So that was our deal. And it just so happened that I was representing just a retail customer that was buying a house. He was a young guy. And for his down payment, he used his 401k. And I knew that, but it had kind of flown over my head a little bit. And so when I started exploring different ways to pay for this investment, I said, well, I actually have a 401k. I wonder how he did that. I called up the guy who bought this small house and said, by the way, how did you manage that? He explained to me how he did his, and I went into my 401k website, and there was a button there that said borrow money or whatever. And I clicked on it, and it told me exactly how much I could borrow and what the rate was. And I think it was about 5%. So I was borrowing against myself at like 5%. Nice. And it just so happened to be about what I needed. I was like, man, okay. So that's how I did it. I went and I found a hard money lender. I looked at, some different things. I think I was going to some meetups at the time. And so I found a hard money lender, Easy Street, and they're out of Austin. And so I found out what they needed as far as the down payment. I could do that with my 401k. So when you're dealing with hard money, like Tavis said, they care more about the actual asset than the person. When you go get a loan from the bank, they want credit reports, they want your history, they want all sorts of stuff. Hard money, I exaggerate a little bit, but is basically if they don't see you on the news that night robbing a bank to figure out your down payment, they don't particularly care where it comes from. Because I know, like I gave them a screenshot of the bank account. Yeah. That was my underwriting. And
so walk us through a little bit, Ashton, just what that deal looked like, just to kind of give our listeners an idea. Somebody may be thinking that they have a 401k, but they only have a $20,000-$30,000 in it.
Yeah. I would have to go back and look at the exact numbers. Give us an idea. Yeah, but I think the purchase price on that. I mean, of course, it was a cheap house. It's East Plano, 3.2. Had bad foundation problems. It needed to be completely renovated. And I want to say that the purchase price was around, I should have done this before the episode, but around $180 or something like that. And I think I needed to come to close with around $40,000. Okay. And
were you rolling in rehab into that?
Yeah, that was going to roll in some of the rehab. And I want to say at the time I had estimated around $50,000 rehab. And probably way under, but this was a few years ago, and I believe the 401k was either 40 or 45,000. I may have had a little bit of cash, but I was able to fund everything pretty much out of the 401k, and so what'll happen is
so it was a little bit over 20%.
Yeah, exactly. That's about what they're going to want. It's about 20%. So, and that's held true. I've done hard money on a couple of other deals. So. What they do is you call the hard money, you fill out your forms, tell them what the deal is, what you're wanting to do with it, and a good hard money lender is going to have a process, and then they do their underwriting and they say yeah, and what they do is they offer you it's called a term sheet, and on the term sheet is basically what it says is we're going to lend you this, you're going to put down this, and this is going to be your rate. Now the big thing with hard money is it's freaking expensive. And typically, I actually haven't priced it out since the rates have gone up, but you're going to be looking at, I would say, your prime rate, your kind of your retail rate, plus at least 4 or 5%, if I had to guess right now. And, at the time, I think I was at 12%. And they'll typically tack on what are called points. At the time, I didn't know what a point was. A point is a 1% of the deal. So if they say 1 point origination fee, and your deal is $200,000, well, that's going to be a $2,000 origination fee. Sometimes they charge more than that. And I think my first deal was 3 points. That's where they give you a discount if you're experienced. So if you're an experienced borrower or flipper, they'll reduce the amount of points they want up front. So they get money up front, and then they're going to give you your loan, let's say 12% annual, 13% annual. And so then when you're paying every month, I pay my mortgage to them, it's interest only. And so then the other thing with that is you get draws, and you probably get draws too. And so to get your rehab money, you have to float the money. So you go buy the materials, the refrigerator, whatever it is. Then you take pictures. Every hard money lender has a different process, but you can take pictures. Sometimes they'll send out an inspector to actually walk the property. Now Easy Street has more of an online version of it. But basically, you have to prove that you spent the money on what you said you're going to, and then they'll release those funds. Then you can use that money again, go buy the next phase, And the thing you got to watch out for is some hard money lenders, they actually charge for their draws. So I think Easy Street's around $300 per draw. So you want to group those together so you're not making 10 draws. That's another $3,000, So there's a game you got to play there. And typically the hard money is about a 6-month loan. And when the market is poor, we've heard that some of those hard money lenders will not extend your loan. I've been lucky and I've had to extend a couple times once, and they were fine with it. As long as you're making your payments and as long as you're on target and you can explain why you're running long or whatever, they're probably going to be fine with it because they're making good money on you. But, you do have to, it is a business, and typically they're going to be funded by a big fund somewhere. So anyway, they have their rules. So that's how
do you remember what did that run you a month? Were you paying monthly fees in? Okay,
well, that one is interesting because that was the one I was in and out of super quick. I might have made one payment on that one, and if I had to guess, that payment was maybe $2,000. When I was doing Polk and I was doing Easy Street hard money, I want to say my payment was $3,200. And
got it.
Mapleton now is a private money lender, and my payment's around $3,300, $3,400. So, and I can get into the private money part here in a sec. But do you have any other questions on hard money, or did I explain that fairly well?
Yeah. No, I think you did a good job with it, and it is similar with the bank, and as far as getting draws, and I have origination points as well. It's typically somewhere between 1.5 to 2 points on the front side, depending on the loan amount and just the deal structure. And we typically, the goal is to be acquisition and renovation total cost under 80% of ARV as far as what the bank wants to lend on the deal. If that
and
makes
that's
sense.
and that's another variable when you're shopping hard money. You want to shop points. So you're going to shop your rate. You want to shop points. You want to shop draw fees. And what was the variable you just said? Percentage of the loan. So they'll go like 75%, 80, 85%. So some of them will actually give you more money. Yeah. Some of them.
It goes back to knowing your numbers, right? Yeah. And buy it deep enough. And the banks are usually pretty happy with me because my numbers are usually, well within range underneath that. And my ARVs are typically conservative. I've been very fortunate over the last couple of years with this bank in particular that I use, that the ARVs, once they get their appraisal numbers back, they're typically higher than what my ARV is. So that's been great.
Good. And with the track record, I mean, the moral of this story is the more experience you get, the cheaper money you get. And if you hit your numbers and you make your payments, you're going to just have access to cheaper money. So,
right.
Now, that being said, Easy Street or hard money, it's pretty quick. I want to say that from the time I said I'm good to go and I have this, we could have closed that deal in maybe 2 weeks or less. Some of it was just me waiting on me to get stuff done. So a little bit faster than that and easier than that is private money. And so the next thing I've done is I've used private money. I've used it 2 different ways. So on the bigger flip that we did at Polk, I had to come to the table with, I think, $120,000 for the house that I found. Again, I did not have that. But what I did have, and I knew that going into it, is I had a friend that's a real estate attorney and his wife. They had decided that they wanted to get into some real estate investing, but they didn't really want to manage a deal. They didn't want to, be in charge of tile and all. They want to have to go find it, and they want to sell it. And they said, look, if you find something, we'll help fund it. And so I went and found one, and they put the money down, and I managed it and I sold it. So our arrangement was, you put your money down, I'm going to give you a flat percentage of return. I didn't make payments to them. It was all at closing. And the nice thing about that private money is it's all up to you. I mean, you can be as creative as you want. You can be an annual interest rate. You can be a flat interest rate. You can say, I'm going to make payments, or I'm going to pay you out of closing. The thing you want to be careful with on that is you want to do a promissory note. You want to make it official. You want to make sure everyone's understanding. They're probably going to take a second position on the loan. That means that if it gets foreclosed on, whoever your primary lender is, at hard money or whoever else they're going to get paid first, and then your secondary will get paid out. So they would take a second position. But you can be creative on that one. And, they're great partners because they don't care what color I paint the house. They don't show up at the work site. They don't check in really. They trust that, I'm doing right by them. And so far they've been paid out, and they love it. So I've used them on that. They actually bought the rental house out in Sweetwater, and I pay them interest on that out of the rents. And so that's a great relationship. The other way you can do private money is I have someone who actually acted as a bank for me. And so the Mapleton house, they funded everything. And our arrangement there was that she was going to pay for the house and half the rehab. So I came to the table with the other half of the rehab. The problem is rehab went over. So I've actually had to come to the table with a lot. So it's great because I've had, great access to money, and it's super easy and very little underwriting. But when things go wrong, and it's like, well, you got to figure it out, so either I have to go back to her and say, I need more money, or I got to figure it out. So, but she's a great partner. She doesn't show up at the work site. She doesn't really care what I do. As long as I'm making my payments, everything's great. And I pay her monthly though. So I pay her basically just an interest only mortgage. She sends me an official invoice. She's very professional about everything, and I pay her, and that's it. So the nice thing about that, though, those two private people, literally, I could call if we have an arrangement, and it's like, hey, I'm going to the bank. Can you wire the money? And yeah, it is like a couple hours later, there's $50,000 or $250,000 in your bank, and that's really nice. It's expensive, my private lenders, I've been around 10% with them, and my other one's around 14%. And it all has to do with how easy it is, how much you need it, what your other options are at the moment. Hopefully long term, I don't pay that, but at the time the numbers penciled, and it was fine, and it was fast, and it allowed me to get into deals and learn, and they get paid good money, and it's worked out so far. So yeah, I think it's great.
So Ashton, to kind of wrap this up, I think, for people listening out there, the key is knowing that there is opportunities out there. We just talked about several different options that you can do and go about, getting started and, and raising capital or finding capital if you find the deal. And we talked about this several times before. Finding the deal is the name of the game. Actually knowing your numbers, finding the real opportunity that exists with an off-market property that has meat on the bone that we can look at and annualize and break it down and take action, right? Put the deal together and take action.
Yeah, I mean, I think we talked about one time. I see it that there's four parts of a deal. There's acquisition, there's funding it, there's the financing of it, there's the management, and then there's the selling. And if you can figure out how to take part in one of those or two or three of those, you can make money doing investing. You don't have to be perfect at all of them. So find a partner that can do the other parts. If you're good at finding deals, then find someone that can pay for it. If you're good at managing stuff and you're good at construction, find a money person. And, kind of the long and short of it is there's money out there, and people have 401ks, and people have bonus checks that they get from work, or they sold a house and now they're renting. Like, there's just reasons why people have $200,000, $300,000, $400,000, $500,000 laying around or more. And if you can show them, hey, here's my vision, you can be good on your numbers, and then you you actually execute, you can find money. And whether that's like Tavis through a bank or like me through friends and family and private money, you can do it. So if you have any questions about any of the details, I know that was a ton of numbers and all that really fast, please reach out. You can find me on Instagram, Dallas Real Estate Guy, Ashton Hines. Please send me a message. Follow along here. We're going to keep talking about how to flip a house. We're going to try to hit all the details. And if you want to learn more, go back to the beginning. We're numbering them all. So I think this is flipping number 4. We've talked a lot about how to acquire it and how to figure out how much you're going to pay for the rehab. And we're just going to keep going down the line. So Tavis, let them know how they can get in touch with you.
I'm Tavis, like Travis with no R, Tavis Westbrook. I'm mainly on Instagram and Facebook. Happy to have a conversation with you guys. So if you need anything, or if you guys have any deals and you're trying to put something together, please don't hesitate to reach out.
Yep. Yeah. We're always looking for deals, looking to close. We can help you wholesale. We can help you flip. We want to help you teach it, to get down that path. However you want to do that, we can help take part in that. So if you like this stuff, like it, subscribe, share it with a friend. It would do us a huge, huge favor. And we hope to see you on Friday. Talk to you soon.